quick start on the ruble. I know the market is very, very thin. We're back to 55. Do you think we're going to stick around these levels?
Ahead of Christmas, most likely liquidity is extremely thin on the ruble and probably thereafter. But I think going into New Year, we could get back in that dynamic. Looking at the oil price and certainly further downward pressure on the oil price is likely to, I think, gain a pressure the ruble, because that's where the ultimate contract lies and where the problems have not wholly arisen, but certainly be a dynamic that hasn't helped the ruble. So I think, yes, although natural relief that we're back at sort of these levels around the 55 level, but I don't think the ruble's out of the woods yet. I think there's still more pain to come.
Another key vote, just back onto the euro now, another key vote taking place in Greece today. The second round today, we've got the third round, I believe, on the 29th. How critical is this to general sentiment, and what does it do to the euro right now?
The general sentiment, I think it's not helpful. I'm not sure that we're going to get much of a reaction today. I think markets really want to see the ultimate reaction if we go to a third round, whether that will force a snap election. Naturally, if that does happen, the risk is we then go back to sort of worrying more about Greece as we were doing sort of 2-3 years ago, looking at Greek spreads the first thing we do when we come in the morning, whatever you're trading, and that was the amazing thing about it. So it's not something that markets are going to necessarily take that well, because naturally you get them back into that dynamic, especially if series of the opposition who are sort of anti-reformist do well and manage to form some sort of coalition. So that would be naturally the downside, and would put further modest pressure on the euro at this point in time, because we once again yet in that period sort of uncertainty, etc.
Where's the euro going next year, Sam?
I see it lower. I don't see it drastically lower, because I see the sort of low about 1.15 on euro dollar towards the middle of the year. That's not drastically lower. There's certainly more weakness like to be seen on the yen. I don't see QE itself being a factor which is going to drastically push the euro weaker, just because the impact of that is going to be naturally weaker than we've seen in the US and Eurozone, because of all the much talked about reasons in terms of, you know, bond yields being much lower, it coming much later in the cycle, and naturally the ability to buy bonds and push yields lower is much weaker than was it being the case for the US and UK.